to kick it off this morning. I'm delighted to be with you today. We're really excited to provide you a lot of content throughout the day and a half. This morning is some really exciting content. Hopefully you'll find informative, thought-provoking, and help you understand where, really where the payment industry is going and where US Bank is positioned. What the themes I'm going to talk about is 3 themes. So if you remember this today, the rest will all fall in place. So when I think of where we are from a payments perspective, I think about 3 topics. We're connected, it's real time, and it's embedded. So what do I mean by that? Connected. You hear a lot of things about APIs. It's how we connect our payment infrastructure to allow our customers to move money. So it's typically through APIs, file transfers, and how we connect. So APIs is the new open modern way to connect to our customers. And so we'll talk a lot about how we're being connected. Of course, real time. What does that mean? From the consumer's perspective, of course, they expect real time. You send a transaction, you want an instant acknowledgement back saying the payment's been received. You want to see it in the account. So we reduce significantly the phone calls to operations centers and call centers saying, did you get my money? Did you get my money? We reduce those calls significantly. And something that I don't think we highlight enough on real time, it's real time 24/7. For those who have been in the ACH world for a long time, that network is primarily a 5-day-a-week network, primarily business hours. So now if you're a small business and you are a restaurant, and on Saturday night, at midnight, you close your restaurant, you do all your receipts, and you want to pay your employees. Well, you may have to wait till Monday, Tuesday, Wednesday till your funds are in your account. But now we can close the batch for that restaurant, and that restaurant can get their money Saturday night at 12, at 1, at 2 in the morning, so they can fund their employees and give them. So as money accelerates, this is where we're leading. These are the type of transactions we have today. We have 10,000, I see my button unbuttoned, 10,000 merchants we have doing this transaction today, where we're funding our merchants at the end of the day when they batch out their stuff. So real time is important, and it's 24/7, 365. So on holidays, oftentimes these restaurants would have to wait Monday holidays till Tuesday, so they don't get their money till Friday, Saturday, Sunday, Monday, not till Tuesday or even Wednesday. So these are the things that we're really working on. So connected, real time, and embedded.
So connectivity. Think of how with that device in your hand, you can connect to and access just about anything, right? Goods, services, information, even ideas. But behind those apps are multiple channels of connection that provide the capability to move instructions, requests, information, basically a lot of data. And I've had hundreds of client conversations over my years in the payment industry, really on how to connect with your bank to access solutions. Everything from transmissions to online and digital, and now APIs and ERP integration. So it's not always been a pretty job to implement these connections, but it is getting easier. So joining me and sharing their expertise today are Seth Blocker, a product head for global payables at US Bank, and Suzanne Galvin, Senior Vice President for our open banking and API channel. So today we really want you to leave this workshop with the answers to these 4 questions. First, what channels are available for you to connect with banks? Easier, faster, real-time, on-demand, not batch, not scheduled with all these changes in technology. What will each of these channels solve for, and why would they be of value to your business? And then you probably are curious about how other businesses are using these types of connections in their treasury and in their receivables and payables processes. And then the last piece is to understand what gaps exist that you're going to need to consider and how you can engage your IT team and banking partners to build these digital bridges for connectivity. So I'd like you to take a moment to watch our Digital Bridge video and get a closer understanding of what we think about building digital bridges at U.S. Bank.
There's a great distance between here and there, between now and next. We could, and we did. It's the journey from one to another, and from the good to the great. For your business, this journey is a digital transformation. It begins along the pathway you decide. Will you go alone through the noise and digitize this and digital that? Or will we travel together from progress to possibility? The right banking partner knows that you lead the way. It's there to embrace what makes your business unique, makes what's complicated simple, collaborates to innovate, understands what's at stake, and the obstacles you'll overcome to build a digital bridge together. At U.S. Bank, we meet you right where you are, wherever you are on your digital transformation. In this partnership, your journey will be yours and ours to share. From simple steps with traditional tech to giant leaps with cutting-edge solutions, we listen. You strategize. We'll collaborate. You'll optimize. Because a trusted partnership is the foundation for greatness. There's a banking partner who builds with you together to help you know what's next and how to get there. A banking partner to join you on your digital journey, who doesn't tell you where the digital bridge leads, but asks, where can it take you? With U.S. Bank, that's a journey worth taking.
So let's start with the how of connectivity, from legacy channels like we talked about, data transmissions and online banking platforms, to the newest technologies like APIs and ERP integration. And you really want to know how you and your business are going to take advantage of the flexibility in this technology that we have in our personal lives to modernize your business, most importantly, to improve the client experience, your client's experience, and then provide you and your team with better and faster tools. So I'd like to start with Seth, and I'd like, Seth, if you could just talk about really how the technology is evolving and how it's enabling companies to digitally transform, how they connect not only to financial service providers, but also to their clients.
Thanks, Nina. Happy to do it, and happy to be here today. So it's amazing, really, how fast and how much how much ground we've covered in the last 5 years as it relates to advances in technology and the ability for banks and customers to connect. I'm just going to go back a couple of years, though, and quite honestly, I've been in banking so long. I remember when we were installing banking software onto hard drives at corporates, and then that transitioned to the internet. But really, when the internet took over in banking, I'm going to say probably around the turn of the century, around 2000, 2001, the internet portal has been the primary way that corporates have really accessed bank services. And during that time, file transmissions have also been a predominant way for corporates to connect to the bank at scale. And really, for the past 20 years, those two channels have been the most popular and most widely used channels available. But in the past 5 years, I'd say from 2015, 2016 onward, there has really been rapid advancement and significant change, and not just a significant change in technology, but a significant change in client demand and client expectations around what's important for banks to deliver. So before I start talking about that, I am going to talk a little bit about the technology change. But at the end of the day, the big challenges that practitioners and corporates face with regard to connecting to their banks is the IT work. that is the biggest pain point. Customers take weeks, sometimes months, to connect to their bank for a file transmission. There's been also rapid evolution in ERP systems, and I think that's been really a main driver for a significant portion of the change that we're seeing. Historically, ERPs, and that's an enterprise resource planning system for the uninitiated, have historically been installed on premise, which means you have a contract with Oracle or SAP or JD Edwards or Microsoft, your own IT folks, or you and a combination of IT folks and professional services and consultants from these ERP companies would have to do a major install behind your firewall. And that could, again, take months, even years, and it was quite expensive to do so. The big change in technology from an ERP perspective is that many ERPs have now gone to cloud, which don't require that same level of installation. It's really configuration. And it's a much easier implementation process. And in fact, most of the major ERP systems who had historically been on-premise are now offering cloud-based ERP platforms, which are easier to connect to, easier to use, and easier to implement, which aligns with that change in demand that we're seeing from corporates and practitioners. And so why is that important? Well, one thing about that is that when the instance of the ERP sits in the cloud, the experience is pretty centralized, and it is mostly controlled by the ERP provider. And that centralization also brings standardization. And when you have a standard way to connect, it makes it much easier because it eliminates that customization, and you can do a one-to-many type of implementation or integration that makes it easier for banks to connect to ERPs and for customers to connect to third-party systems. That's the beauty of it. The second piece that's really changed is that it's opened the door for APIs, or application programming interfaces. So that is another way that makes it easier for customers to connect at pace, at scale, and for example, using real-time capabilities. And that is really the beauty of APIs, of the cloud-based ERP, is that the ERP can now expose data that's out there and offer a standard way to connect. Last thing I'll say about this is that all of these capabilities, as I indicated earlier, are driving changes in client demand. The phone, mobility, the consumer experience, that experience is now translating to different needs, different demands, and different expectations on banks, on ERP providers, and that entire connectivity ecosystem. Businesses are now looking to embed payments experiences within their consumer or customer experience. Businesses now expect to be able to connect to the bank through their native experience within their ERP. So lots of changes, lots of things to consider, and depending on your business strategy or the technology you have, I think the good news for you is that you as practitioners and corporates have more options than you ever have before.
Perfect. So now we have the cloud, we've got APIs, and we know that data transmission and that digital online platform that Suzanne, I guess it would say it has its place, right, as a right solution for the problem. But what I saw during the pandemic was the digital channel enabled so many companies to quickly connect and upload a file to outsource check production to the bank because they just couldn't get into the office.
Yes.
So in an emergency, that was great, but I think longer term, probably not as attractive because it's so manual. So let's get more specific, if we could, with the newer options. And how do you see us enabling this digital transformation that so many clients are after?
Well, that's a very good question, Nina. I totally agree with everything that Seth has been saying and also what you just said a minute ago. There's been a big shift in the last number of years toward a digital focus, a digital strategy. So we're seeing our customers and their customers, as you've mentioned, wanting to have a focus on give me the access now, give it to me where it matters most, give it to me in the manner that matters most to me, that can be most efficient. So we're looking for a 7/24, 365 connection. We're looking for an experience that is optimal all the time, that not only our corporate customers and other customers can have, but also that their customers can have. And so to your point, the API provides that. It allows for us to create that experience for our customer, to create that experience for their customer. So in many situations, we will be solving for a need that is going to be specific, but other times we're also looking at very standard requirements. So you used a minute ago the example of a check. We're able to create standard data to be communicated and connected system to system using an API that will provide that standard off-the-shelf solution. And so what we've done is we've created APIs that are out of the box, available through the US Bank Developer Portal, where our customers can go out and connect directly to that created existing API that's available that provides that choice to connect with us in this manner rather than in a batch file or some other legacy system. But also what we've done is created the ability to custom solution to our customers, but we can talk about that a little later. But what we are really all about is the experience, bringing that experience to our customer, ensuring that they are able to deliver an optimal experience so they can realize speed to revenue, or efficiency, or some other value that is of importance to them. That's what is so critical that we realize has to be delivered in the solution offered. And so a big focus of what we do is looking at the end-to-end experience that needs to exist and providing support services and consulting services around all of that so we deliver to expectations.
That makes a great deal of sense when we are now putting ourselves in the customer's shoes about how do they want the experience for their customer. We should have been doing this a long time ago. Seth, let me just ask you, we've laid out this history, you have, Suzanne, and the challenges, and then Suzanne's outlined the value that these options are really bringing to the table for clients. So let's get really practical. That's why people are tuning in. Let's get practical for finance staff working in the payment space, right? And talk about what customers are doing with these capabilities in their processes. So how about some examples of things that customers could try now, just maybe to get started on their digital journey? I mean, everybody's in a different place. Some thoughts on that?
Absolutely, Nina. And I agree with all the things that Suzanne said. I mean, the technology that's out there, the work that banks have done, that ERP platforms have done to enable these possibilities are pretty incredible, but I think they can be overwhelming at the same time if you don't have a clear sense of direction and understanding where you want to start. So I think the big question for payments practitioners out there is, where are you in your journey to digital, in your journey to connectivity? If you work for a company that, say, has been in business for 20 more years or even longer than that, it's possible that all the new technologies out there can be overwhelming, because you might say, what I have works really well now. And quite honestly, if you haven't started to dabble in it, you're not going to be able to completely change your entire payment process or your connectivity process overnight. But the good news is that there are absolutely ways you can start small and also experiment in ways that can drive real value right now for your business. So if that profile fits where you happen to be in your transition to digital, let's say, let's take an accounts payable example. You're sending vendor payments, perhaps to the tune of, hundreds of payments or thousands of payments each week to your suppliers. There's a couple of different ways you might be doing that. It really is still possible, and we hear this all the time, even though it can be surprising, that some customers are still doing, these processes manually, downloading an Excel spreadsheet and uploading it to, say, a web portal. And your goal is automation. Maybe you're already sending file transmissions, and they're working just fine. So quite honestly, like one option, if what you're doing there is working really well for you, is really do no harm. Perhaps, the file transmission, and I agree with this, right? If you're sending a file transmission and it's working really well today, it really can be the most effective way for you to send payments at scale. So I think a great area that you may want to focus on might be to strengthen the controls around your payment process. So, for example, maybe you want to use API technology to protect your business against potential payment fraud. Perhaps you're paying a brand new vendor that you don't know, you're working with for the first time, and they give you an account number. How can you be sure that that account number is valid and accurate? Or maybe an existing vendor requested a bank account number change. Same issue, right? How can you be sure that with imposter fraud going around, business email compromise going around, that is an absolutely legit account number? So now with a single API call, you can validate that vendor's account ownership, which gives you 100% certainty that the payment you made to this new vendor or to this vendor who decided to change their account number, maybe they're banking with a new bank, maybe it's US Bank. You could be 100% certain that your payment is going to get to the right place. Or maybe you're paying a consumer refund, and this is a different example, and you've been sending checks to this consumer. You send checks out for consumer refunds, or even ACH, which is, it's still an efficient way to send a payment. But now, if you want to use an emerging payment type like RTP or Zelle, you can send an API request to see whether a consumer payee is eligible to receive a Zelle payment if you have their email address or their mobile phone number, which is something, many companies now collect as a part of their standard process. Or maybe you can even send a real-time payment, which quite frankly is what consumers are coming to expect as it relates to refunds and payouts in various industries. With RTP, though, you do need the account number and the routing number in order to do that. But there's a way to check to see instantly if a consumer payee is eligible to receive that type of payment, and you can integrate that into your scalable payment process. And to me, that's a great way to start if you're happy with what you have. I think the main point I'm trying to make here is that APIs can provide the flexibility to keep your existing processes if they're working well, and at the same time incorporate new technology that can help you optimize your process and improve controls. I think the fraud prevention and the Zelle RTP eligibility checks are great ways for you to get your feet wet as a practitioner or a corporate with APIs while still adding value immediately and adding value in a significant way with relatively small changes.
So Suzanne, we don't want to leave you out of this conversation. So with an idea of how you can get started, which I'm always a proponent of filling in the gaps, right? Where do you have gaps? Let's go over that first and find a way to solve for it. APIs are really going to be a key, it sounds like, for this transformation. So when you're ready to do more, okay, so you've tried that. When you're ready to do more, what's the direction? What's the next step that maybe you should take to fulfill your business strategy?
So that's a very good question, Nina. Yeah. So I want to build on what Seth was saying a few minutes ago. A couple of things that he pointed out was he was talking about the value that APIs can provide in trying to reduce fraud and to provide some speed to, because everybody is being asked to do things faster with fewer resources, deliver things into the market sooner, etc. And so he's absolutely right. Utilizing off-the-shelf APIs that we've built and exposed will allow for very quickly the ability to validate authentication, authorization of a transaction, and therefore reduce fraud. And as I said earlier, we've created a number of APIs and we continue to expose those through our developer portal, developer.usbank.com. And that allows the customer, who is, from our perspective, the engineering team at our partner environment, to go out there and to look around and see what APIs exist that they could connect to today that would allow them to quickly deliver that value and integrate to us to deliver a better experience sooner. And as I said, the first thing they should do when we look at this whole digital transformation, front and center is the customer experience and the customer, what the customer needs and what the problem is. So what we've done is we've created a set of standard APIs available off the shelf that a developer or product team can go look at, read. We've built them to REST standard structure, and that's an industry standard that developers can relate to very quickly. They can see, how does the API work? What information is it calling? What information is that returning? And they're able to see this documentation. They're able to test out the API in a sandbox environment, which is very safe, secure environment that allows them to play around and to, kick the tires, make sure that this is what they need. Does it work with your environment? That's all DIY. And then we can move from there into, assuming they say, yeah, this really works, now we go into full-on integration and testing, and then the systems are connected. All along that journey, we have built infrastructure and support to help and ensure that we're there for our customer, that we're there for the customer if they have questions, working with Seth and his team. If they have business-specific questions, if they have contract questions, Seth's team will take the lead on that. But if the developers have questions about the API or integrate this into the environment, we have resources that help with that. And then, of course, once we've stood this connection up and we're now live and the data is whizzing back and forth, 724, 365, we're there with production support as well. So it's very important along the journey for our customers to understand that for us, what we've built in the API is the connection. We've built it consistently designed so it's easy for them to understand and to industry spec. But what's most important is we approach this from an experience point of view. We want to make sure that the experience that we deliver, because that really, at the end of the day, is the differentiator. It's really, how do we look after our customer? How do we handhold the customer? And along the way, if there's something unique, if there's something different, if there's a special use case that our customer needs creative solutions from us, we're able to help with that as well. And we're able to design and call up maybe a net new API that we don't have available today that complements what is available and provides that unique solution for our customer. So bottom line is, our API is standard, beautifully designed, consistently designed, but what we wrap it around is a mindset of a customer-centric perspective, both our developer being a customer and their product team, and as well any end users that they might have as well.
Well, I think then what I'm really hearing is that we want to make sure that it's as simple and as easy and as well set up for the customer to immediately pull this in, so that then they can focus on their customers' needs and their customers' preferences to leverage the connectivity. Do I have that right?
Yeah, absolutely. And to give them speed, you know, we want to help our customer have an advantage in the marketplace. We want them to be able to get to market quicker and be able to deliver to whatever, proposition that they have, and to make sure that it's solid as a rock and living up to the values that we as the bank hold dear, but also always keeping that customer experience front and center.
And it seems, from what I have seen in my experiences, what I've watched with clients engaging with APIs, is that they want to not have to do everything to retrofit it back into their process. They want it to be embedded. They want it to be instant. They want it to be invisible to their customer.
Yeah.
Less friction, but also the beautiful solution, right?
Right. Exactly.
So let me turn to Seth and say, so Seth, key trends. I always like to think about that. Key trends that are driving this approach to business transformation. So do you have some specific examples, I think, of what customers are doing to effectively compete, focusing on this type of connectivity strategy?
Yeah, so I think you had two questions in there, Nina. So the first one was the trends, and then the second one was
show me.
A specific example. So really interesting. I mean, I think Suzanne, you touched on the customer experience, which I think is paramount. And as you know, we have historically thought about the customer experience. It's really treasury, AP, and AR, at least from a banker's perspective. And yes, I'll admit, I'm a banker. But what I think is really transition is now that we really have, as bankers and as service providers, we not only have to think about our customer, which is the treasury department, the accounts payable department, the AR department, but we need to be thinking about and help our customers deliver that differentiating, that competitive experience for their customer. And that's how banks can really go the extra mile, or any service provider really, to support your customers. Now, if you're a product manager at a corporate or a practitioner, right, I think we're all well aware that COVID accelerated the move to digital for consumers. So we were all stuck at home, sheltering in place, and we still had needs. We had to buy things, and we had our phones, our saving grace. I'm not sure the screens were so great for our children, but you do what you can do. So if you're running a business, right, and you have to make that move to digital. That if you are selling to or buying from consumers or providing refunds to consumers, that you need your payment experience to be integrated with the shopping experience. You have to create an easy, intuitive way and frictionless way to make payments to or receive payments from consumers. So with that in mind, and the move, you have to have a phenomenal digital experience to compete. So the questions you need to be asking yourself, if you haven't already asked these, are, how does my company do this today? Has this process been evaluated recently? Is this a modern digital experience, and how? And how does my current digital experience compare to the digital experience of my competitors? So, I think, that part is just incredibly interesting. These lines really continue to blur as it relates to how payment services offered by your bank can be integrated and then ultimately embedded within the customer experience that you're delivering. And the big or sea change that's enabled that is APIs. Mm-hmm. And so to illustrate how that trend is manifesting itself and how the advancement in technology and connectivity enablement has advanced, I want to provide an e-commerce example. in the car buying and selling marketplace. So we're in the process of helping one of our national car dealership customers relaunch their car buying and selling marketplace. So that essentially, they've built an e-commerce site. Remember when you used to buy or sell a car, you had to go to the used car lot and you'd buy a car, or if you wanted to sell your car back, you had to drive it onto the lot, and you met with a person and they said, here, we'll pay you $50 for your car, right? Well, you know, times are changing quickly. All of these car dealerships nationally, in many cases, because of COVID, are and the advent of some new customers out there, new players out there, they're evaluating their competitive experience, and they're completely redesigning their entire checkout experience so that when a consumer sells his or her car to the company, they're able to do it A, digitally, and B, receive an instant payout. The previous experience had the consumer waiting for 2 days after selling the car to the company to receive a payment. So, you know, kind of going back to my earlier comment, expectations have really transformed here. And the expectation is, to Nina's earlier point about, you know, embedded, instant, invisible. It's all possible and doable. So I think what our customer quickly realized was that they needed to get that payment process embedded directly into their car selling experience. So they put those two things together. So I don't know if any of you have been onto some of these sites, but I think it's pretty cool. You enter in a couple of details about your car, and then you can get an instant quote, which I think is an awesome experience. And so what the company did was, in partnership with US Bank, was once the customer received that quote for their car, they're presented with a registration button, and they click on that, and it triggers a series of API calls to collect the information that's needed to send a real-time payment to the consumer after the transaction is complete. So US Bank, and this is like really, you know, Suzanne talked about do-it-yourself experiences or fully hosted and customized experiences that we can offer. This is an example of that fully hosted, customized experience where when the customer clicks on that button, they're actually going to a site that looks exactly like our customer site, but it's really US Bank hosting that entire payment registration experience, which we built according to their brand standards. So the consumer then goes on, they're presented with another interface that's an API call where the consumer can select their bank, and instead of entering a bank account number or a routing transit number, which in many cases consumers have no idea about, they have to go research it to find out, which is friction, right? We're trying to remove all of that. Instead of that, they just enter their online banking username and passcode, which then creates a token that has all that important information encrypted that represents the consumer's bank account and routing number. But this information is never stored by the car dealer, which is our customer, and doesn't require the consumer to ever provide it. And so once we complete that registration process, the consumer schedules a time for the valet, which is their person who comes and actually goes to their place to pick up the car. So they review it, make sure it's what the customer said it was, and after examining the car, the rep has their own handheld device, probably an iPad. They select a button on their iPad indicating the transaction is complete, and that triggers yet another API call for US Bank to send the real-time payment to directly to the consumer, along with a notification message that goes right to their mobile phone. They check their email, and they can see immediately that the money is in their account. I mean, it's amazing how far we've come. I mean, even just 2 years ago, neither US Bank nor our customers had envisioned that we'd be working with our customers this way. And now we are. We really are transforming their experiences and their customer experiences together through API technology.
After 25 years in this business, it's like music to my ears, because I always felt bad that we would just drop it at the doorstep and say, okay, I hope this works for you, and now you figure it out on your side how you want this to work. Well, and Suzanne, I guess, these examples show us that the connectivity part really needs to be simple and easy, so that the important pieces about the client experience and the delivery, et cetera, happens the way it needs to for a particular customer. But so how is our approach really helping clients close? There's got to be some gaps here. There has to be some gaps in this connectivity.
So that's a very good question, Nina. And what we do is we try to take as much of that gap, as you call it, out of the equation. So as I mentioned earlier, by providing the support services, we leverage a combination of resources in my group and also in Seth's group. So we have technology teams and we have business teams who work very closely together, always focused on that customer. And so when we go into a customer engagement, we have sometimes very simple customer engagements that Seth mentioned earlier. It's kind of out of the box. The developer comes and they want to integrate at something simple. But when it's something more complex, then we have a programmatic approach to it. And really, we rely on bringing that team together. We look to the customer. We want to understand the complexity, the challenges that they face, the urgency of their timeline, budget constraints, whatever that might be. And we work very much with the relationship manager, with our technology teams, with our subject matter experts who understand the environment that our customer works within today. And we therefore create that plan. Now, is that something that is going to be cookie cutter? Absolutely not, because that's where we have to create that project plan. We've got to put the resources together. And we need our customer to come to the table with their resources too, because they understand what they're trying to accomplish. They understand what their technology requirements. They might have partners that they need to bring in as well. We may have a partner that we need to bring in. So we really have to approach it in that programmatic, but always customer-centric approach. And we leverage a lot of the learnings that we, US Bank, have achieved or accomplished over the last number of years. We pivoted a few years ago with a big focus on digital first and an API first strategy for the bank. And we have invested and stood up a whole digital organization with that in mind. And so as a result of us having gone through the experience and the journey of doing that transformation, we more than better understand, or we're well able to understand the challenges that our customers are going through, and we therefore apply that knowledge and those unique experiences and resources to help solving them and bringing everybody together. But critical is, as I said, a programmatic approach, very transparent approach, collaboration from the very beginning, and then working together from there on.
So I'm thinking, in the interest of time here, because we've gone through a lot of different types of information, and Suzanne, I think you just summarized that very, very well. I was going to give each of you just a chance to maybe leave us with a couple of thoughts about, if you were them, if you were these clients, what are the two thoughts you'd like to leave with them about what they could do?
I think you should consider how you work with your bank. We are changing the way that we interact and the way that we have historically interacted with our customers, enabled by the technology. We've invested in new ways to work with you. So whether it's about enabling business to business or vendor payments at scale, where you can connect to APIs and improve your controls, improve your payment speed, improve your payment experience from a B2B perspective, or perhaps APIs, which I didn't talk about, can also be embedded within your ERP so that you can interact with the bank directly with your ERP system. That's one new way that we can work with you. Secondarily, to summarize what Suzanne and I have also shared, is the second way we can work with you not only to improve your experience, but also to improve your customers' experience. And we can work with you in any capacity to do that, whether you want to do it yourself and connect to our APIs and run your own experience, to a deeper level type of consulting session and co-creation session where US Banks works with you to share the art of the possible and ultimately help you to deliver that. And so I look forward to working with you and your teams on that, and as well as the rest of my teams. We're ready and prepared to do so.
Perfect. Well, Suzanne, you're going to take us home.
Okay, well, I couldn't have said it better than everything that Seth just said. I think I'll only have one thing to leave you with, and that is we're all about making it easier to do business with US Bank. That's our whole focus. So
perfect.
Well, good morning, and thanks for joining us at the Changing the Payments Industry workshop. And of course, welcome to Mobile Payments Conference 2021. We're glad that you've chosen to join us for our session today, really about looking at simplifying digital payments and how the need to simplify has gone from really an option to more of an obligation. So my name is Jake Barker. I am a working capital consultant at US Bank, and joining me today is Mike Watercott. Mike is a product manager here at US Bank who really focuses on many of the faster payment, instant payment options. And then also joining us today is Sarah Chikowski with the Money Movements team, and the emerging Money Movement team, here at US Bank. And she also focuses really on those emerging faster payments as well. So Mike, I know we had some discussions about providing some type of, I guess you could call it maybe a reward for those in the audience who chose to join our session. Do you want to take a minute, kind of help us understand how that's going to work?
Yeah. Absolutely. So one of the payment types that will come up throughout this session is Zelle. As we speak, us bankers, we know that money talks, so we're practicing what we preach here. So we're sending a small Zelle payment to any of the attendees who provided a Zelle alias when they registered for the conference. So you might remember a question along the lines of, if you have an enrolled email or mobile number with the Zelle network provided here. So if you see your phone buzzing or an alert popping up that you've received a Zelle payment, it's not huge, but a small Zelle payment, it's from us, and it's just, obviously a thank you for joining us today, but I think more importantly, a real life demonstration of how easy it can be to send a fast B2C payment. Now, obviously, Zelle is just one example of a fast and easy Zelle payment, but obviously, thanks for being here. Enjoy a coffee on us, but also maybe think about how your customers could benefit from something similar to the payment we sent you. So on that note, Jake, I mentioned Zelle is just one of the payment options out there. We all know there's a ton going on in payments,
right,
especially in business to consumer payments. So Jake, maybe you could kind of set the stage and talk about just that broader B2C payment space. What's happening?
Yeah, business to consumer payments have really been somewhat of a challenge in this country for a long time. The one universally accepted method for making payments to consumers has really been check. But as we all know, check has its challenges. And so the other economical solution has been ACH, which again, it kind of comes with its own set of challenges, especially as you're making those payments that are possibly just 1-2 payments to each consumer. You still have to collect and maintain that information. And so what we're seeing is traditionally kind of more of a shift to check payments as opposed to these ACH payments. But there is now a new shift happening that's really being driven by consumers, where they're looking for these instant payments. And there's an opportunity to meet that demand with payments using really only email address or phone number. And that payment can get to those consumers instantly, as opposed to waiting a couple of weeks for a check or waiting a few days for an ACH payment. It's instant. And not only that, there's not the challenges that can come along with the other traditional payment methods. And so we're seeing those newer faster payments being leveraged for things like claim payments, refunds for consumers, and just any number of consumer payments. So here at US Bank, we really feel like it's important to make those payments, and use those faster payment options, but it's also important, and we've seen this from consumers, it's important to provide a choice to your consumer in how they're getting paid as well.
Yeah, I know it's super important, Jake. And one of the messages that'll come up throughout this session is just the way consumers are paid. You're doing it easily, offering fast payment, offering choice. We want to help make that be not an option, but really something that's just expected. If you're paying a consumer, it shouldn't be, a check is the only way. Consumers are really expecting choices, and they want those choices to include, fast payments. And just kind of get the gears churning. I can tell I call it a fun story of a really easy way US Bank helped one customer in particular improve the way they pay their consumers. And the problem is a customer that has vending machines in big box stores. So I call this use case the machine ate my quarter, the machine ate my dollar. So maybe you walk away and just chalk it up as you lost $1, but there are customers that would call our client and say, you know what? I lost some money. I need a refund. So the problem, the situation that the client was trying to solve is that process was mailing dollar bills. So, you heard that right. Mail, paper currency would go in the mail to this customer that called them asking for a refund. So the solution that really modernized this process kind of night and day was introducing Zelle. So I sound like a Zelle cheerleader. I kind of am as a product manager on a faster payments team, but just reiterating how simple that payment type is. So a reminder, Zelle is an alias-based payment method. So in order to make a Zelle payment, all you need is a customer's email or mobile phone number. So now when that customer calls, the first question is, aside from, I'm sorry, the machine ate your dollar bill, is, do you want to get your refund via Zelle? If so, they ask for their email or mobile number, and boom, they're paid immediately. They do also offer the option of a check. Obviously we're not trying to promote checks, but I guess in this use case, it's a step in the right direction, moving away from mailing paper currency. So a really simple change with many benefits. Our customer's not mailing paper currency. No one's going to the bank once a week to withdraw a bunch of ones. Just a super streamlined, digital experience for our customers, consumers. It's really, I think that's the message, just a better experience, right? It's kind of turning a negative, I lost $1 to like, wow, I was reimbursed in a really slick way. And I don't expect everyone or maybe anyone on the phone, you probably don't have vending machines in stores that you have to issue refunds for. But again, just telling this story to get you thinking about, maybe similar situations where you're paying consumers and there might be opportunity to improve it.
Well, and there's a benefit, like you mentioned, to the consumer that there's a bad situation, you're turning it into a positive with getting them the payment instantly. But also think of, and I know you mentioned a few of them, but the benefit over the mailed cash, even just the overpayment that they might have been doing, right? If you're sending $1 to everyone who lost a quarter, you know, that scale that out. And I mean, there's just so many benefits to this new solution of leveraging Zelle as opposed to cash in the mail. So
absolutely,
that's a really good story. So Mike, you know, I know we talked about, I talked briefly about some of the challenges of the traditional payment methods, but I thought maybe we could dive a little bit more into those, maybe help us understand really why. I mean, we know why the consumer wants these instant payments, right? It's convenient, it's easy, but maybe help us understand why the payer, why it's beneficial for the payer to move away from some of these traditional payment methods towards these faster payment options.
Yeah, absolutely, Jake. So, you know, checks, we all know this, right? I don't think I'm breaking, this isn't breaking news, right? Checks are expensive for you to send. It's very manual. You know, even if you are outsourcing your check printing process, just the reconciliation, just all around checks, manual process, they're slow. Typically they're mailed out. It's not necessarily a fast payment. If those checks are low dollar amounts, often, right, you issue the check, that's great, but there's probably a pretty good chance you're dealing with escheatment issues when those low dollar checks aren't presented for payment. And again, consumers, I'm not going to say nobody wants a check, right? But the chances are the vast majority of consumers probably don't want that check in the first place. And then you look at ACH, right? So ACH is certainly a step in the right direction. By all means, we are not preaching to advocate completely replacing ACH. So something like payroll, I mean, ACH is a perfect solution for. But there are challenges with ACH, right? So our customers sometimes face challenges with securely storing account number information. Sometimes gathering that information is challenging. Consumers might not have their account information on hand, or they might not know where to find it. So the message is, these traditional, I'll call them traditional payment methods, certainly work, but they may not work in a manner today that is completely meeting consumer payment expectations. And some of these newer payment rails, so particularly, I've already talked about Zelle and the Zelle network, but also real-time payments, or RTP, as you hear it called. We're seeing some real volume here. So these aren't, some unheard of payment rails, and we're starting to see some real volume through these networks.
Well, and I'm glad you said that, Mike, because I think there is still a bit of a narrative out there that perhaps RTP, real-time payments, and Zelle are still somewhat fringe payment methods, and that they're not really being leveraged or used in large-scale applications. So Sarah, help us understand: is there really any merit to that narrative?
Yeah, thanks, Jake. When you think about it, just the growth volume, these are new payment rails within the last few years. So yes, there's still that idea that they're new and not widely accepted. But if you look at the actual volume running through these rails and the growth that we're seeing year over year, these are definitely not what you would call fringe payments any longer. I mean, they are becoming the future. They're becoming mainstream. So like if you look at Zelle, 106 billion in volume for Q1 2021, 393 million payments. And real-time payments, 9.4 billion in volume, 23 million payments for Q1. And these are gross numbers of like 74% year over year for Zelle volume and 150% year over year growth for RTP. So just the volume increases that we're seeing year over year just really help drive home that point of, these are the up and coming payments. These are the future that we're going to be looking forward to. So really trying to think of how can we use Zelle and real-time payments, in all of the business processes go forward.
Well, and the ones that stand out to me are really the transaction volumes, that they're increasing so much too. It's not just that there are payments being made for larger dollar amounts, but more people and more payments are actually being made on these networks too.
Yep, absolutely. So question to you, Mike, who is really driving the demand for these digital payments?
Yeah, kind of a softball question, right? And we've been talking about it already, and it's the name of our session, right? The customer's always right. So naturally, consumers are absolutely driving this demand for digital payments. And there's, we have a number of stats you can look at, but there's really two that, in my opinion, really paint a picture of kind of where we are. Both with, what is that demand and how, are the demands being met. And those stats are, one is from an article in payments.com. 3% of companies meet consumer demands for instant B2C payments. So again, consumers are driving that demand, but they only feel that 3% of companies are meeting that demand. So the second stat that I point to is it comes from the most recent AFP electronic payment survey, citing, what are the barriers to electronic payments? The top barrier, it was 76% of businesses cited it, was a shortage of IT resources as their top barrier to electronic payments. So other, barriers kind of down the list, the cost of making change to an existing process is a barrier. Multiple or no standard format amongst all these new payment types is a barrier. Collecting and storing bank information is a barrier. Maybe a barrier is just that existing processes seem to work okay. So that's really it in a nutshell to me is, consumers are driving it. They want faster payments, but really the so what to me is, what's stopping, our customers from meeting those expectations. It's really our job as a bank to find ways to overcome those barriers and offer simple solutions and help our customers really tap into and get connected to these faster payment types.
Well, and yeah, sorry.
I mentioned a ton of different,
right.
And I know you've kind of had an eye on those in your role. I think they all tell the same story, right?
You're exactly right. Yeah, one that stood out to me was it was actually pre-pandemic, but it was an ITAE study that said 65% of consumers in the U.S. think it's important to receive instant payments, and then 70% of those consumers, it would choose the instant payment option if given a choice. So that's pre-pandemic. So imagine now in the world we're in, where convenience of just pulling up and to a store and being able to get whatever you want delivered to you at your car or even at your home, the expectation for these instant payments are just even higher now than they were before. So definitely everything I'm seeing completely supports that too, Mike. It really, the consumer wants these instant payments.
Yeah, and I think there's we can't talk about every single client use case, but that's a great slice of life example, right? If a store, a brick and mortar store can I can buy something online and they can walk it out, hand it to me through my passenger window, I should be able to get paid in a pretty fast manner as well if I'm owed a payment. So Jake, I can maybe talk about, like I said, I can't cover them all, but maybe just a couple other, real use cases that we see or industries that have certainly taken advantage of faster payment types. There's benefits. Each one is kind of, each industry is unique, but the common denominator is B2C payments, right? At the end of the day, consumers are being paid. So again, just a couple, but healthcare providers is a really common use case. Typically, very high volume of checks in the healthcare industry. I touched on the shipment issues, right? Sometimes it's low dollar. It's high volume, but it's low dollar checks. So sometimes these checks are going uncashed, particularly in a patient refund. type of use case. And, a solution to all of this is, we offer solutions to our clients to give patients in this industry, give them a choice in how they're paid. So making it super simple, right? Just tell us who you want to pay, how much you want to pay them, and we'll take care of the rest. And Jake talked about this earlier, offering choice. I think in a patient refund example, super important to be offering choice. When you're, the demographics of who you're paying could range all the way from out of high school to 100 years old. So not just saying 100-year-olds aren't going to want a fast payment, but there's not going to be a one size fit all. So certainly solutions to give choice and kind of meet everyone at their own personal needs.
Well, and Mike, I think, when you're talking about these refunds in the healthcare sector, sometimes there's kind of a whole host of different scenarios, right? Where sometimes you don't know you're owed a refund, and then a check just shows up at your door, and it's like, well, I wish I would have been more involved in that from the beginning and known that was going to come, or maybe you're owed it, and you really need that money. I mean, there's a lot of situations where that's the case, and so just really involving the consumer earlier on, giving them that sense of being involved in that process by allowing them to have that choice, really can create a better relationship with that patient in this situation, right? In the healthcare situation.
Yeah, absolutely. And I mean, that's patient refunds, right? I mean, I've gotten a $5 check from my dental office before, and like, it's made my day. I liked getting it. But there's other instances where there's maybe more urgency, right? So another industry, insurance. So if you think about every insurance advertisement you've ever seen, really the experience of the customer is paramount, right? I filed a claim on my phone and I got paid instantly. So obviously, right, we as a bank are offering solutions that adhere to that message. And payment types like real-time payments and Zelle are incredibly valuable to align with that overall message, right, of a seamless digital, fast experience. So it doesn't matter if your insurance claim was approved quickly, if it took you 7 to 10 days to get a check in the mail. Some other use cases, class action settlements, a high check use case, right? Traditionally, a lot of checks when there's a class action settlement. And I'm sure we've all received, the trifold check. Maybe you didn't even know you were included in the settlement. You got $50 for something. And again, it's great. It probably made your day to get it. But, in instances where, you're filing a class action claim, if a judge has approved Zelle, for example, as a payment type, our client administering class action settlements can gather that email address or mobile number and not have to mail a check. Higher education is another one, and I'll tell a story later in this session, but students probably don't want a check to begin with as well. They want an experience to be digital. So we have solutions. I'll talk about one where we're giving choice, but again, another use case within the higher ed education industry is just looking at Zelle. So think about a student athlete receiving their per diem. To receive it via Zelle is incredibly convenient. And then Jake, one last, again, this isn't an overarching list of every use case and market out there, but employee assistance funds is another one we end up talking a lot about. Again, urgency is key here, right? So if an individual, an employee is in financial need, ACH and check probably aren't going to cut it. So offering, RTP, Zelle as a means for someone in an emergency payment situation to be paid. U.S. Bank, again, kind of practicing what we preach, offering Zelle as a payment option within our own employee assistance fund. So again, just a sampling of kind of what we see across the board. Each industry has its own kind of nuances, but at the end of the day, B2C, consumers are consumers, and we know they're demanding faster payment choices.
Right. Yeah. There's so many opportunities to make these payments work within really any scenario that you might encounter in your business. And so I think then you have to look at, okay, how do I make it simple, not only for me but for the consumer to get these payments, right? And what does it mean? Make it simple. I think it's faster, easier. Like we've said a couple of times already, right? Providing that choice. And so, Mike, you alluded to kind of talking a little bit more about that, the higher education scenario. How are colleges really solving for providing that payment option in the most simple way for their students?
Yeah, and we have one kind of a story of a client that was gracious enough to publish a story with us in the earlier part of this year. The College of St. Benedict and St. John's University, kind of two related universities in Minnesota, kind of shared their story of a solution we helped them implement to meet those changing student demands for faster payment and for choice. So their story, and again, I promise this will be my last story, and I'll let Sarah speak after this, but when a student was owed a refund, it was check, and the options were, do you want to come pick it up or do you want to receive it in the mail? And that's it. So while it's a choice, it's probably not the choice that that everyone wanted. And they knew that, right? So they were hearing from their students, we want, what else can you offer, right? So they were aware of it, and they implemented a solution at US Bank that gives students choice in how they're paid, and the product rightfully named Payee Choice. So what they're doing now is when they have tuition refunds that are owed, or any other student refund for that matter, or student payment, they're simply telling us, hey, US Bank, this who I want to pay and their email address and how much. So saying I owe Jake Barker a tuition reimbursement for $1,000. Here's Jake's email. You do the rest. And that's really it. So what's happening from there on out is we're sending an email to the student. Hey, good news, Jake, right? You've got a tuition reimbursement your way. Follow these instructions to provide a choice, provide your banking details, and get that payment as fast as possible. So, and then furthermore, right, we're storing that payment preference. So if Jake is owed another payment sometime in the future, Jake's payment preferences are already on file, and that payment just goes to Jake. However, he already told the system to do. So, I mean, putting yourself in the student's shoes, right? You've gone from picking up that paper check to now receiving an email, probably accessing it on their phone, and they're getting choice in how they're paid. So a hassle-free kind of digital experience that students have come to expect. And then from our client's perspective, right, we're removing those complexities of adding, multiple payment types, right, like ACH, Zelle. Well, how are we gonna figure out who wants what, and what their account information is or what their email is? So making kind of it invisible to them, right? They just tell us who they want to pay, and we do the rest.
Well, Mike, I wish my experience as a student would have been that easy. Actually, just recently, so my wife is in school, and she dropped a class. There was kind of that period where tuition was still owed, but they said, well, it might be refunded, right? So I had to make the choice: do I really want to make that payment and then have to go through the process of waiting for the refund? Because I know that the college she goes to doesn't have Payee Choice, so it's not as simple as that. And so I actually chose, let's just not make the payment and wait until the process happens. I think we had a fine of a few dollars, but I would rather take the fine than have to wait 3 weeks for a check to come back for a refund. So it really is the expectation, I think, of especially in this situation, right, with students, that these payments be instant and like you said, invisible. That they just want it to happen. I don't want to have to worry about it. Just make it happen. Get me my money, right? It's owed to me, and let's have it. So
yeah, that's crazy, right? I hope that's an edge case and folks aren't having such a poor payment experience that they're paying fines in lieu of getting a slow payment. But no, that's exactly it. And all the kind of closing comments on this this use case is just, their timing was just coincidentally perfect. They were implementing before the pandemic, so the gears were already in motion. They made it incredibly easy to kind of have this process in place at a time when picking up a check in person was probably not an option. And then subsequently, there were CARES Act relief payments that leveraged this solution as well. And I'll close it up here. A quote from the client directly that sums it up so well. And this is a quote. It said, "This product may seem cutting edge to us, but the students are so immersed in their culture of everything is online and fast that a solution like this just becomes something they expect." So again, the message here, right? We don't want these faster payments for our customers to be an option. We're trying to make the case that they're expected, and they're really important to bring into kind of your payment processes when you're paying consumers. And I promised I'd let Sarah, I'll stop talking here, but Sarah has another kind of different real world example of a use case using real-time payments. And it might not be truly a B2C use case, but I think it tells a super important story on how RTP was used to kind of meet expectations of a customer. So Sarah, I'll let you tell that story.
Thanks, Mike. Thanks, Mike. Those are all really great stories. And yes, what this one is really more of a B2B use case, but it's still focused on, the customer and that cash flow and that experience. So we have Elavon is our merchant acquiring arm here at US Bank, and they have built a funding file to our customers to be able to have the merchant customer receive their payment for their processing via real-time payments. So it's really focused around that cash flow. And as much as consumers want to, control their cash flow, small business customers are in the same boat. It's all about cash flow. And especially now coming out of the pandemic and going through the pandemic, cash flow is king. How can I get my funds in my account as soon as possible so they're at my disposal to use in the way I need to, not that I'm sitting waiting for that ACH payment, 2-3 days later. So it's really about utilizing that real-time payment in a way that's efficient for the customer. We'll get them their funding as soon as we can, as soon as they're batching in, and we can get those payments out to them. So it's the story I like to tell, going along with the stories, is think of it like a small business restaurant. And so they are processing on a Saturday, and they have an extremely busy Saturday that they hadn't planned for, coming out with all these reopenings now. And they get to the end of the night and they're running short on food, and they need funds in their bank account so they can go, buy some additional groceries to be able to open up on Sunday. If they're set up to be funded via real-time payment, they're closing out their processing batch on Saturday night, they're getting their funds on Saturday night. So they're able to go to the store on Sunday morning and buy the groceries they need to be able to open back up. So it's really that use case of it's real-time payments. It works 7 days a week, including holidays. It's not the traditional banking, Monday through Friday, 9 to 5, and the bank's not open, therefore I'm stuck. It's real-time payments. It's bringing that, efficient money movement, to the future and using it to their benefit. So it's, like I said, it's all about that cash flow and helping those customers maintain that cash flow to be able to run their business. So that's what we're really trying to focus on, is how do we use these new emerging money movement functionalities to, improve processing for all of our customers and consumers. So wrapping that up, I guess, Jake, back to you to kind of pull this all together here for us.
Right, and I guess before we move into that, I remember there was, I think I read in Payments Journal, I think it said 66% of small businesses say funding timing has the biggest impact on their cash flow management, right? And so you're exactly right. That timing is so important for these small businesses to really be able to keep things flowing, keep things going.
Yep, absolutely. Cash flow is king.
Right. Well, I think, just thinking about all that we've talked about, want to kind of talk through some of the main takeaways we hope you guys have received today. And I think the first one that comes to my mind is really that there is a benefit not only to the consumer getting paid, but to the payer making the payment from using these faster payment options, right? It's not just a one-way street. It really is something that can be beneficial for both parties. Mike, anything else that jumps out to you?
Yeah, no, I think just making it simple, right? We're here to be advocates for these faster, more modern, I guess I'll call them payment types. So we're not here talking about here's how here's the products we offer. I think we just want to really drive home the message that it's important to kind of start really trying to meet consumer demands. They're changing frequently, but I think the common theme is they're just faster payments, getting choice in payments. So again, it's our role as a bank to create solutions and offer products that make that easy. So that story with St. John St. Ben's is just one example of one product that we utilize to make offering payment choice super easy. But yeah, I think that's my main kind of takeaway. Sarah, if you have any closing thoughts.
I would second that. I mean, it's as we've said before, that it's consumer expectation. They're looking for these faster payments. They want to be paid quickly, and whether it's a consumer or a small business or whoever it may be, is how do we utilize these new tools that we have, these new payment rails, to help customers, help consumers, help small businesses. And they're new and they're exciting and potentially even a little scary from that perspective, but it's also the future, and it's the expectations of our customers and of small business customers that we help them figure out how to make this money movement happen and make it as as easy as possible for them. But yeah, it's definitely becoming table stakes in a lot of these industries.
Yeah, and again, we kind of joke around about sending out a real Zelle payment, but hopefully you receive that and you see how easy it is. Again, practicing what we preach. Again, enjoy the coffee on us first and foremost. But I think the main takeaway is just kind of in the real world, right? Like think about maybe we could do this for this set of consumer payments. One other thought on that is, maybe when you registered for the conference, you accidentally gave us an email address that you hadn't enrolled in the Zelle network yet, right? You gave us your work email because we're just creatures of habit, right? We type in our work email, but your personal email is enrolled with Zelle. If that's you probably received an email from us basically saying, hey, we're trying to send you a Zelle payment. Take these easy steps to enroll in the Zelle network. So I just mentioned that as an example of a hurdle or kind of a barrier to some might be, well, the Zelle network's great, but not everyone's enrolled yet. So just a real life example of a tool that we make available to help our customers make that simple, right? You have an email, you have a mobile, you can send a Zelle payment just like we did today. If they're enrolled, that's great. If not, we'll help your payees take that quick action to enroll. So Jake, I'll kind of let you close it here as we move towards some Q&A, and in the Q&A or in the chat, let us know if
yeah, of course. So again, thanks for joining us. I think at this point we'll go ahead and move into a Q&A session. So I want to welcome any and all questions that you have, and we'll go ahead and fill those together. So thank you.
Thank you.
We've got quite a few questions building up in the Q&A section of the page here. So we'll just go ahead and start from the top. Would encourage you, if you see a question that you want to hear an answer to, please go ahead and vote for that question, because those are the ones that'll move up to the top. So first off, it looks like our most popular question or comment is thanks for the coffee. So that's good to hear. Good to know that those payments went through, and and hopefully you guys are enjoying a coffee on us, or soon will be. So the next question, it looks like that that's popping up to the top. It says, compared to credit cards, there's no purchase protection when using Zelle. Are you planning to provide such protection going forward, for example, for larger payments? So I'll go ahead and open that up to our group, to Mike, Sarah. What are you guys' thoughts on that one?
Yeah, no, it's a good question. This is Mike. Hopefully you can hear me. So the answer right now would be no. Really a good question, good opportunity. Just as a reminder that Zelle, at least from a a business to consumer payment perspective, it is a final payment. So it's an irrevocable payment. So good reminder, if you're making a payment, business making a payment to consumer, although it is really easy making the payment using just a mobile number or an email address, important to make sure that's a valid and current email or mobile. And once that payment is complete, it is final. So of course, if there's you feel there's an error or if there was fraud, the Zelle network does offer a claims process. I compare it to a wire. It's not guaranteed. It's a best effort basis between banks. So I think the question, when I hear purchase protection, I think about, obviously like using a credit card to make a payment. So that type of functionality really isn't supported by the Zelle network today. So for instance, you're on a merchant's website, you get to a checkout, you can enter a credit card, or maybe you can do PayPal. Right now, the network doesn't support like a pay with Zelle. There may be in the future, we'll see. And I guess when we cross that bridge, we'll see if the answer changes from a purchase protection standpoint. But I'll end there. I'll just remind that it is a final payment, so it's important to make sure you're paying the right individual. But thanks for the question.
All right, so it looks like the next question here that's getting some votes, at least one, is what has been the trend in customer or consumer demand in 2021? And I think I can start off. I think the trend is similar to what we've seen going on, right? Consumers really want speed, convenience, ease. There has been an acceleration of that desire and that demand for those things with the pandemic, and I think that's really where we see the trends going. More people leveraging these options for faster payments, for easier payments. Mike, Sarah, any other thoughts on that?
Yeah, I would. And sorry, Sarah.
Go ahead.
Personally, I mean, from my view, of course, it's been pretty clear the demand has gone up. A lot of that obviously has been fueled by world events of the last, seems like forever, but in the last year or so. I will say I'll be really interested. The AFP put out an electronic payment study, kind of dated. It was in 2019. I hope a refreshed version of that study is introduced. It would be really interesting to look kind of back. Also, a good barometer that I've used is on a quarterly basis, the Zelle network releases network stats. A lot of those stats are the Zelle network, across the board. And we all know that the Zelle network is the majority of the volume is, me paying Jake or Sarah for splitting a bill, or I bought something on an online marketplace, something like that. But just the payments quarter over quarter are just increasing massively. So that to me is a good barometer of the demand going up. So Sarah, I don't know if you have any other insights you'd want to add.
Yeah, I mean, I was just going to say, the questions we're getting from our customers are really, what are these faster payments? They're hearing about Zelle, they're hearing about real-time payments, and even starting to hear now about FedNow. So there's a lot of curiosity, a lot of questions we're getting from customers of, okay, this sounds like the newest, greatest thing. How does it work? What do I need to do? How can I bring this forward? Do I need to bring this forward? Usually the first question. Once we get past that, then it's, how do I do this? And sounds like this is where I need to go. So that's definitely what we're hearing is, yes, these new faster payments seem to be on the top of everyone's mind. And it's really just, then how do we bring that forward? How do we get everyone on board and being integrated to be able to use it?
So I'm going to jump down to one, Sarah, that I think you'll probably be primed to answer. It says, I thought not all banks could accept an RTP. How does that work? And then there's kind of a follow-up question with that says, what is the dollar limit on RTP payments? Are there any exceptions? So kind of a loaded question there.
Yeah, yeah. So from an RTP perspective, that is correct. It's not 100% as of yet. So I will say that number continues to keep growing as more and more banks join that network, join the clearinghouse and the real-time payments network. So it continues to grow and grow and grow. Right now we're looking at close to 70% of all U.S. based banks being able to participate. So it's a great number, but again, yes, not 100%, but it continues to grow. From a dollar perspective, so yes, there is currently a $100,000 limit per transaction, and that is a TCH network limit. Now, I will say within US Bank, as a US Bank customer, we have a different way of processing. If you're keeping money within the US Bank walls, we've figured out how to handle that on us. And so those limits don't pertain if you're within the US Bank walls. But from a TCH limit, yep, it's $100,000 for any payment sending to another TCH bank.
Okay, and then the next question, this one's really interesting. It says, do banks consider digital currencies such as Bitcoin or Ethereum as the next generation of real-time payments? And if not, what do you think will be the next emerging real-time payment? I'll put that out there.
Yeah, this is Mike. I don't know. I'll be interested if you have a qualified answer, Sarah. But I don't know if I have a good answer on kind of the digital currencies, to be honest. Right now, at least speaking for US Bank, I don't feel like I have enough information to say that they're the future of real-time payments. I think Sarah just talked about RTP. I think RTP is obviously here, so I'm not going to say it's the next faster payment, but I think it's I think that's obviously the volume I think will just continue to grow and grow with real-time payments. Forced to pick one, again, this is a payment type we didn't really talk about in our session a lot, but I think has huge potential is push to card. So a payment to a consumer or small business using their existing 16-digit debit card. I see being a huge opportunity for volume in that, I guess I'll call it, more generically speaking, real-time or faster payment space.
Yeah. Well, it looks like our time is up. I'm being told we need to move into break. So we'll do our best to go through the questions that you guys have sent in through the different ways to chat them, and we'll work to answer those. So again, thank you for joining the session. Thanks for joining our Q&A. Appreciate it, and hope you guys have a good rest of the conference.
Ditto. Thank you.
Thank you.
Bye.
Welcome and thank you for joining us today to discuss Payroll 2.0. My name is Jenny Gare and I lead the prepaid strategy and platform team at US Bank. Joining me today is Alicia Reed, US Bank Prepaid Counsel, and David Smith, US Bank Prepaid National Sales Manager. Today we're going to discuss how payroll solutions are evolving to meet the market needs. There are many factors influencing payroll and payments today, but the one constant is change. As the three of us prepared for today's discussion, we kept coming back to that theme about change. So I thought I'd start us off with a relevant quote from Albert Einstein. The measure of intelligence is the ability to change. It's a very simple quote, but one that I felt was very fitting for the past 16 months of traumatic change that we've all been through. Change in how we work, how we communicate, how we transact, and how we pay. There's no denying that the pandemic has certainly changed how employers and employees view payroll, but I think we'd all agree that this evolution in payroll and payments began well before the pandemic. It just helped push it farther. So today, we're going to cover three influencers of the payroll transition: the rise of the gig economy, the labor market, and the advances in technology. We will take a deeper dive into how these trends are playing out in payroll products, why employees are demanding better pay experiences, and why employers want and need to offer better payroll services for their employees. And lastly, no payroll discussion is complete without considering the legal and regulatory obligations. I'll turn it over to Dave to get the discussion started.
Hey, thank you, Jenny. And as Jenny mentioned, we have seen some significant changes over the last couple of years in payroll products and services. We feel one of the biggest drivers of this evolution is the growth of the gig economy and its influence on more traditional occupations. According to the Department of Labor, in 2017, 34%, or nearly 55 million Americans, were part of the gig economy. This was projected to be at 43% in 2020, and obviously was impacted heavily by the pandemic. We also are starting to see the changing face of the gig workers. In a May 13th Forbes magazine article, it stated that more white-collar occupations and workers are becoming part of the gig economy, and that 24% more people entered the gig economy during the summer of 2020 than in previous years. We're also starting to see that they're taking on more gigs. It's not just not one gig anymore. According to an Every study, during the pandemic, we saw the increased need to generate income during the pandemic led to more than 59% of gig workers enrolling to work for more than 2 companies, and 1/5 of them enrolling to work for more than 3 companies. So it's obviously the changing gig economy is providing quite a bit of influence on traditional payroll. The second driving factor for the evolution in payroll is simple. Low unemployment and employees are in the driver's seat. According to a Wall Street Journal article and Department of Labor statistic, at the end of April, there were 9.2 million unfulfilled jobs. This was heavily concentrated in the service industry, so in restaurants and hotels. We're starting to see this play out in our own communities. Businesses are having to alter business hours due to labor shortages, so having to open late, close early. The super competitive job market is putting the power into the hands of the employee, and they're asking for changes in how and when they get paid. So now let's move over to how we're seeing this evolution play out in the marketplace. We're starting to see more and more employees ask for electronic pay options. As an example, a payroll card. These are safer, more instant, connected, less expensive for both the employee and the employer. They're also asking for the tips to be paid out in near real time or real time. Gone are the days of bringing in cash at the end of the night to tip out servers. This was really driven heavily by the pandemic and having the Uber Eats and having curbside pickup when you were only paying with credit card. So those employees and servers were asking for their tips to be delivered near real time. In addition, the employees are demanding access to earned wage, either by early ACH or via earned wage providers. As you can see in this next slide, the influence of the gig economy is crashing into the traditional payroll. Just as gig workers don't want to be tied down to a factory or office job with 9-to-5 rules, they similarly don't want to be paid in the same traditional payroll way of every week or every other week. As you can see from this Every study, it found that almost 45% of gig workers want to be paid daily or on demand, along with another 45% wanting to be paid weekly. So now let's pivot to look at why are employees demanding and asking for a more involved and enhanced payroll. This is really the human side of payroll. According to a Federal Reserve study, if faced with an unexpected expense of $400, 40% of adults would not have the funds to cover it. Another way to look at this is around 100 million Americans live paycheck to paycheck. This was only increased due to the pandemic. So how does this translate into the health of the actual employee? According to a Visa study, 68% of surveyed employees felt personal financial issues were impacting their health. In a different study, 82% of employees worry about their finances more than their own health. So when we start to look at how are employees rewarding employers who offer a better or more enhanced payroll experience, like an earned wage or tip, the same Visa study showed that 95% of employees would be interested in working for a company that offers earned wage services, and 79% of employees would be willing to switch to an employer who provides an involved payroll experience like earned wage. Now let's pivot to why employers should offer a better payroll experience. This is very simple. In one of the most competitive job markets in recent history, you have to be competitive to get the talent you want and to retain your talent. According to the Harvard Kennedy School of Government study that they conducted, having earned wage access can help reduce employee turnover by 19%. In addition to this, there's a tremendous amount of cost savings for you as the employer. According to some estimates, the cost of replacing an employee costs about $4,000. Consider the fact that, again, very tight labor market, and you should be doing what you can do to try to retain these customers or employees so you don't run into that cost. The other cost savings that the employer can benefit from is by driving electronic pay adoption. Various research shows the average to cut a paper check costs anywhere from $3 to $7. So there's significant savings for the employer and also has tremendous benefits for the employee. So Jenny, as we look at some of these trends across the payroll landscape, how do you think technology enables some of these changes?
It's a great question, Dave. There are several drivers that are making faster and real-time payroll payments possible. Advances in the payment rails and how we pay, the explosion of digital capabilities, and quite honestly, the demand by the consumers to want it digitally, and then the last is APIs. Let's start with how we pay and get paid. Traditionally, payroll has leveraged ACH rails and checks to make payroll to deliver payroll to employees. As Dave mentioned, there's been a huge push to electronify payroll payments for lots of reasons, including shortening the cycle, reducing the costs, reducing the risk, and most recently, how do you dispense the payroll safely to a distributed workforce? The payment rails have responded with a lot of innovations and alternatives on how you can pay and when you can pay. Card networks, for example, have provided push or money send transactions. Many of the fintech providers, earned wage access, for example, have leveraged that to be able to pay and instantly to consumers. The real-time payments network adoption is growing, as well as the enablement of the capabilities. FedNow is coming on board. Banks are providing early ACH for payroll and other programs. These changes have allowed all the parties, the employers, the providers, the processors, the banks, to really the ability to change how employees can access their funds in real time. These innovations actually give you the flexibility to decide how and when to pay based on the type of payment, and gives you more control over the experience and the economics. Next, let's consider the digital capability explosion, and like I said earlier, more importantly, how consumers want to be engaged. Consumers are increasingly digitally engaged in everything they do, from social media to gaming to chatting, managing their weight loss and their finances too. It's only logical that they want to manage their payroll and finances in the same way that they do everything else in their life. So it's important to meet the consumers where they are on their mobile phones. I want to share some mobile stats with you on this slide to help drive my point home, because I think it's that important. In 2020, there were 3.5 billion smartphone users globally, and that number is forecasted to grow to 3.8 billion by the end of this year. 77% of Americans have smartphones. And lastly, this one's my favorite, 66% of Americans check their phones 160 times a day. I had a chuckle when I read that, and I immediately thought of my kids. Typical, right? We always blame the younger generation, but I had to do a gut check and say, no, that is how I interact. That's how I manage many of my daily events. And think about us in our normal work lives. And when you're back to travel, that phone becomes even more essential. So I think you get where I'm going here. Meeting the customer digitally is not just a good idea, but it's a must-have. Creating a digital-first experience is really important. It allows the consumer the flexibility and to manage their finances on the go, but it also helps create confidence and develop trust with their employer and their banker, which results in loyalty and longer relationships. I think we'd all agree that's a win for everybody there. And in my experience in launching and supporting these programs, a simple interface is true, a simple intuitive solution is really going to net better adoption, which turns into better usage, which reduces risks, reduce your cost of offering the product, and extends that relationship. If we can bring better experiences to the market, we can literally improve the lives of our employees and our customers just by doing the right thing, removing friction and risk. So how are we seeing this play out during the pandemic? We saw significant changes in many of our payroll programs. With employers not allowing employees into the offices, they had to make some changes in, one, how they processed their payroll, but also how they distributed their payroll. Dave, you manage our client relationships. Maybe you could share a good example.
Yeah, Jenny, it's a really good question. And we had several large employers, nationwide employers, as well as some government agencies who unfortunately had to shut their offices down because of the pandemic. And those folks who were still on a paper check were unable to actually physically get into the location to pick up their checks. And then they had to rely on the U.S. mail, which obviously had some disruption. And so what we did is we actually worked with quite a few of these to quickly onboard and get them into electronic pay and our payroll card, which really got their employees their wages that they needed.
That's a great example. Another area where we saw the digital capabilities help in these solutions and help advance it was the servicing element. If you recall, at the beginning of the pandemic, many people were losing their jobs or transitioning into different jobs. So that you have a lot of people that are looking for perhaps their last paycheck, maybe starting a new pay experience. And then we also had the stimulus checks. So suddenly, all the financial institutions had this sudden surge in the environment. IVRs were going crazy. Call center queues were growing. And we saw that too. We were able to leverage the digital solutions we have in the market and honestly tune them for the unique scenarios, providing unique information or do-it-yourself things through these digital applications to allow people to quickly get their answers and move on to more important things in their lives. So you can see these are both examples of how the crisis has propelled both electronic payments and digital engagement. The last technology advancement I mentioned was APIs, and I know the first session shared with you the benefits and the value of APIs, but I thought payroll is just a great example where we can bring that to life and show you it. In payroll, you're often leveraging many partners to bring one solution to an employee, and to make that simple, APIs allow you to create a seamless integration that will allow the consumer to interact and engage with more confidence. And obviously, as I said before, that really improves the relationship, the usage, and it's a win-win for everybody. For example, in this competitive job market, I think Dave mentioned many employers are looking to add earned wage access providers as a retention advantage for their employee base, and APIs can allow us to make this integration seamless behind the curtain, if you will, and provide the employee the instant payroll access. So to recap, the advantages, how technology is influencing, is the payment rails are changing. So there's a lot of new opportunities in how we pay, and they'll continue to change, so keep your eye on them. APIs allow us to create these seamless integrations and provide digital solutions so we can meet the customers on their mobile phones where they want to transact. I'll turn it over to Alicia to share a little bit on key legal and regulatory considerations.
Thanks, Jenny. The types of electronic payments and products that you describe sit at that intersection between financial services law and wage and hour law. And for an employer looking to add new electronic payment options or expand the options that they already offer, it's important to understand the legal obligations that go along with those payment types and the services that you may be looking to provide your employees. Earned wage access products, because they're very new in the marketplace right now, also present some unique legal challenges and opportunities. Employers throughout the U.S. have the opportunity to offer electronic methods of wage payment. And I think most of us are offering at least some electronic wage payment at this point, even if it's just a traditional direct deposit to an account that the employee has selected from the marketplace themselves. Employers are also adding payroll cards, as Dave mentioned, in order to provide a better product to their employees, to provide that benefit and some additional services the employee may not already have access to. Federal and state law are generally going to require that employees have at least 2 options to be paid if there is an electronic payment method on the table. The goal there is to make sure that the employee isn't forced to do business with just one financial institution that the employee may not actually want to do business with. So offering a payroll card beside direct deposit is usually a good way to go. There may be additional requirements under state or local law that require you to offer a check option as well. And those same laws, since they vary, it's important to understand, exactly what is in place for the jurisdictions in which you operate. And it can also be important to understand if there are differences for the types of work that your employees do. for some industries, particularly in the construction space, there can be very unique requirements for those electronic wage payments. Federal law also requires certain fee disclosures be provided before an employee selects a payroll card. And there are specific requirements around the methods for those disclosures to be delivered. So as you walk into providing a payroll card for the first time, or as you're considering changing the type of payroll card product that you offer, it's important to look at the delivery method for your disclosures and ensure that they meet the legal obligations that you've got there. At the state level, there are also some states that require unique disclosures. Places like New York and Illinois have specific information about the services that go with a payroll card that are required to be offered. In New York, it's actually required that that information be provided in writing. So there are very specific requirements for how you're going to deliver that information to your employees. We've found that the clients that have the most success in driving adoption of those payroll cards and other electronic pay methods, as well as consistently meeting those legal obligations for choice and for disclosures, are looking at their onboarding process and the other ways that they service existing employees to try and find a good spot where they can consistently provide that information before an employee is making their first choice for a wage payment option or making changes to the ways that they receive their wages. For instant payments, employees are turning towards earned wage access products. As Dave and Jenny mentioned, this is something that employers are making available to their employees as a benefit and to meet that need that an employee might have to receive part of their wages before the next pay period. The providers in the marketplace are approaching that employee need and that employer desire in a lot of different ways. There isn't a uniform set of legal requirements for earned wage access products in the United States right now. There's a patchwork of different types of laws at the state and federal level that might apply depending on exactly how the provider is structuring their product. Some providers in the marketplace have structured their earned wage access product in a traditional advance. Think of, walking in and asking the boss for an advance on your next paycheck. Using that model, the providers are following a set of laws that have been in place for a long time that most employers are fairly familiar with. There are other providers in the marketplace that are taking a different approach, though. They are treating the advances on those earned wages as assignments of wages, or they're running the money through pass-through accounts. There could be a purchase of the right to be paid in play. And because each of those types of arrangements have different legal obligations, it can be very important for an employer that is exploring these services to ask questions about the provider regarding how they approach the payments that they're making, and really ask questions about how the legal obligations associated with that particular type of payment or that particular type of transaction are going to play out, and who's going to be responsible for actually meeting those obligations. Are there going to be new things that the employer needs to take care of, or is your provider going to handle it all for you? Because the earned wage product is so new and definitely being driven by technology, there's also an opportunity for employers to engage with state legislatures and regulators to influence the way that the law is going to respond to this technology change. California, for example, has considered a couple of different versions of regulation that would create a whole new regulatory scheme for this type of product. They're actually also trying to use some of their existing regulatory tools to handle it. At the time that we're recording this, the California Consumer Financial Protection Bureau actually just released a memorandum of understanding with an earned wage provider that confirms the California agency has the ability to regulate the service and places some responsibilities on the service provider. So this is definitely going to be an area of the law that is changing and shifting, and it's going to provide an opportunity for employers to engage and make sure that the law ends up where they need it to. And at very least, it's going to be a great time for your lawyers to spend extra time with you. As I wrap it up, I think I'm going to go ahead and give you the disclaimer that I probably should have given at the beginning. I am an attorney, but I am not here to provide you with legal advice. So if any of the things that I've shared sound interesting or sound like something that you need to check out, definitely reach out to your own counsel.
Thank you, Alicia, and thank you everyone for your time today.